Hey everyone, it's Justin from LitTube here yet again with Phil, and we're going to discuss, well, kind of piggyback off of the last video because we kind of discussed the oil crisis, but in very minor detail. And there's new information that has come to light. I mean, as of right now, we're filming this on the 22nd of April, 2020, and it was recent news that the oil futures for crude oil went negative. I believe it was for the month of May. And then for the month of June, those oil futures are also going down. So this was pretty big news coming out for any oil price in any sort of form to be going negative. I actually went and did some ground truthing earlier today at my local Sunoco and saw the gas prices around $1.76 a gallon. I thought it would actually be a little less than that, but maybe pretty soon we'll be filling up our tanks for free. What say you, Phil?
Well, actually, I did a little research on that myself because I was making comments to people before about we're going to see gas for under $1 or gas for 50 cents. It depends on the state you live in because there are taxes. I forget what the taxes are. I think the cumulative federal and state taxes in Maryland are like 70 cents. I can't remember, 70 cents. So they would have to be paying the gas stations to take gasoline, and yeah, I don't know.
But how can you put a tax on something that's being like practically given away?
Well, the government would if they were giving gasoline away at like 20 cents a gallon, then the government would say a 70 cents cumulative federal and state Maryland tax. So you'd have negative 20 cents a gallon of gasoline plus 70 cents. So that'd be 50 cents a gallon of gasoline in a weird kind of world that I don't think will happen, but who knows?
Huh.
Yeah.
Okay.
There's a whole long process to go from the ground to the Sunoco anyway.
So could you explain for our viewers what exactly are the implications of these futures going down for oil? Because that's really more of like a trade, a commodities trader type lingo. But like, what does it mean for the average person?
The futures for the average person.
Yeah, like for people that aren't playing the commodities markets and don't really care about like trading oil prices. I mean, like what for like other people do they need to be concerned about with this news that came out?
So what you're asking, okay, yeah, that's what I figured. I was trying to make sure. What you're kind of asking about is what is the bigger picture, which is interesting because I was thinking that before we started about an hour and a half ago. Yes, there's the issue of those who know how to trade this stuff, which I don't know how to do and I'm not willing to do anyway. And then there's the bigger picture. And what I wanted to do to start with, this is the article I told you about I found today. And I hope I can hold your and other people's attention, but I wanted to read it. It's not that long. And you'll see why when I read it when I get to the end. This is from Forbes. American Eagle Energy became the fourth U.S. energy producer to file for bankruptcy protection in the aftermath of the big drop in crude oil prices. The Colorado-based company that buys and develops oil wells in the Bakken oil fields of North Dakota and Montana filed for Chapter 11 bankruptcy protection on Monday in Denver's bankruptcy court. American Eagle Energy, which recently missed an interest payment on its debt, listed assets of $222 million and liabilities of $215 million. Shares of American Eagle Energy traded for as much as $7.50 less than a year ago, reflecting the stunningly fast collapse of oil prices in recent months. Still, big financial busts generally produce many corporate bankruptcies. But that has not been the case in the United States oil sector, where many independent oil companies emerged in recent years and raised lots of debt financing to drill for shale oil using new techniques. Quicksilver Resources, BPZ Resources, and WBH Energy are the only other U.S. energy producers to file for bankruptcy court protection so far. Another independent oil firm, Sabine Oil and Gas, has missed. There's a typo in the article. I think it's it's either an interest payment or interest payments, and could be next. So you heard what I read, right?
I did. And so what this reads to me, and you can correct me if you think I'm wrong, but that the most leveraged oil companies are the ones that are in trouble currently.
Yes, but that's not the big point, because there's a piece of information I'm not sharing with you about this article yet.
Which is?
Guess the date. Yeah, guess the date. Yeah. Oh boy. Guess the year.
2020.
Nope.
1919.
Not that far back, no. You want me to tell you?
Yeah.
This article from Forbes magazine, the author is Nathan Vardy, May 11th, 2015. So 5 years ago, and I already knew this because of a documentary I watched about stuff that was going on 5, 6, 7 years ago. But 5 years ago, we already had 4 companies, U.S. oil energy companies, plus a 5th one, filing for bankruptcy. And by the way, I'm going to read some more of this article. Some oil companies may be finding some financial relief with West Texas intermediate crude rebounding to, get this, $59 a barrel. Okay, so back in 2015, oil companies were going under, were going bankrupt when crude WTI was about $60 a barrel. And before I go on to my main point, I wanted to read one more point. I found this on this. I mentioned the article says that a year prior, so this was, I guess, May 2014, the shares for American Eagle Energy were trading at $7.05. Yeah, guess what they were trading at around the time the article's written?
Less than $1 a share.
Yeah, 5 cents. I looked it up. I think this was the last day they were trading shares before they got bankruptcy filed through. May 14th, 2015, 5 cents a share. So my main point with all this, and it amuseth me greatly when I read or hear, we didn't see this coming, this is incredible, we didn't know. I mean, to me, that's entirely, completely absurd. I think that someone, if we want to get back to the original kind of point about how we had the negative oil prices yesterday, someone with enough intelligence and information would have easily been able to predict what happened yesterday.
Well, I mean, and there was already news that came out previously about essentially like Russia and Saudi Arabia and all of them kind of like stepping on each other's toes and the producing too much, right?
Well, no, I'm saying that's one bit of information. I mean the fact when we look, and this is complicated, and I know that neither of us necessarily understand it, but the contracts ran out for whatever that month was. So there was a day when the crude oil for the WTI, or the stuff linked to the WTI, and by the way, if you go to oilprice.com, there are still U.S. oil, crude oil producers that are still offering oil for negative prices. You go to oilprice.com. Yeah, because WTI is the benchmark. I'm not sure exactly what that means, but if you look at actually more specific, like if you look, I think it was called like Mars or something, that was still trading negative after WTI went back into positive. And you go to oilprice.com, and there's a whole, I mean, Canada, same thing. They're also selling oil for negative prices. But yeah, that's what I'm saying is that when you look at, number one, the supply issue, which you already alluded to with Saudi Arabia and Russia, which has been going on, by the way, for the last 7 years, and the demand issue, which has been completely hurt by the virus pandemic, then
Right.
an intelligent person observing the oil market would have been able to predict what had happened yesterday. And if I can figure out, understand how all this works, I'm pretty sure when the next month's contract finishes, again, I'm not sure how it works, but we'll probably see the same thing again a month from now, where for one day it's going to dip below zero and then spike back up. I think, just because that's the nature of trading.
Well, you know what's funny to me though is because you know that I'm fairly active on a stock trading type like forum website called
Yeah.
Alpha, and before all this stuff really got bad with the oil market, there were so many people that were just like pumping MLPs and Exxon Mobil, like basically all these these like oil pipeline creators and like all these big time oil companies. And like then when the oil crash really started happening, like the initial stage is not when we got to the whole like negative pricing thing. There was still like people going like, oh, this is a perfect time to like buy more Exxon Mobil at a discounted price. And it's just like, really?
Yeah. Well, that gets into, by the way, and I haven't gotten to this yet, a book I have on my shelf. I'll pull it off right here because we will discuss this later when I get around to finishing more of it. I found this outside a Lutheran church in my neighborhood, The Money Game by Adam Smith. Not really Adam Smith, but that's the pen name he's using. And how the mindset of people who use the market, how their mindset works. And literally their plural mindset singular, how the mindset of the market works.
Oh, another like, 'cause I was reading comments on some of these articles too, and there was more than one person that made a reference to like picking up one of these oil contracts and like filling their backyard pool with oil to like store it in a pool in their backyard.
Oh no, I mean that's completely if someone, people who have the resources and the capacity to store oil are either going to make a killing when the price shoots back up, which it will. It could be years. I might be 2 years. I'm not sure. Or they're going to get burgled. It's going to be one of the two. They're either going to sell it for a lot of money, or someone's going to just take it. So those are, if someone being able to store oil, but I mean, it costs, but the thing is, it costs money to get the oil somewhere to your storage location, and then it's going to cost you money to store it, and then it's going to cost you money to take it to the refinery. And on top of that, you'd have to be able that you don't violate state, local, state, and federal code for that type of thing. So yeah, you can make all the jokes you want, and yes, there are going to be groups of people who are going to be able to do that. For me, it's silver. For me, I am trying to hoard silver. I will openly acknowledge that. So yeah, people who can hoard oil, absolutely should do it. But the average one of us here is not going to be able to do that. And it's going to be a long time till it's worth it anyway.
Let's talk about expand on what we touched on a bit in the last video as it relates to oil, because you mentioned something on the lines that this would be like a precursor to what's going to happen next in terms of like oil being the first thing to crash, then more things crash because of that. And why do you think that is?
Well, oil, I don't know. I've been for a while now, many years. I hate how it hurts the environment, but I've always been very interested in fossil fuels. I think it's because geology was like my favorite, like the science I could tolerate. And that's where petroleum comes from. It's rock. The thing is that crude oil in the contemporary world is basically the same, or rather I should say, speculation into crude oil is the catalyst for our contemporary, or one of the catalysts for the contemporary massive economic crisis we're in right now. Back in the panic of, I mentioned before you, panic of 1819, The catalyst was speculation in food. It happened again in 1893, where people borrowed to farm, and then food prices crashed. So what you already alluded to or mentioned earlier, and I read in this article, and I've been reading, and I actually, in my notebook I started today, I don't know how far I'm going to take it, but I started keeping track of some of the oil companies, and then some of the, I don't know what you call them, but like the investment and hedge fund people, like companies, businesses, they're only businesses, they're investments, that are running these things. But the main thing that you and everyone else should know is that the crash in oil prices actually started about this time. I mean, about the time of the article I already read, which was 5 years ago, because of what was going on in the United States with, they call it fracture drilling, I think. Is that the full term, I think? But fracking, where because of our, in the United States, because we long to be energy independent like we have been in the past, we developed the new technique for drilling oil in out of more difficult locations. And I don't know if you know, but it was in the past year that we started becoming, I think, a net exporter of oil. Like, we actually produce more oil. I mean, we still import it because of like the way pricing works, but the United States actually produces more oil, and I think I say in the aggregate, than that which we actually use. And that comes out of what was happening after the last recession. And I have to go look up again to get the specifics, but where they call it the shale oil boom. So all across, what I mentioned, Dakotas through Texas, where they had new drilling techniques. We could talk about that another time, to get more oil out. So people were thinking, these investment banks and whatever, hedge funds were like, oh, well, we'll just loan all these people money so they can drill new wells and pump oil, and then we'll get a return back. And that's coming to the present right now, where a lot of people think that there is going to be a rebound down the road in oil trading, which, yeah, there'll be a rebound in like maybe, I don't know, like I said, 2-3 years. I mean, well, it depends what happens with the virus, depends what happens in the history of the world. But the one thing that happened, I tried so hard to find this today, but back in 2014, 2015, Saudi Arabia actually did what they did a few weeks ago, which was they accelerated the pumping of oil in their country to try and destroy the fracking industry in the United States. And they almost succeeded. The reason why some of these companies I mentioned in the article went bankrupt, partly, I believe, is because of the Saudis pumping out more of their own oil to cut down the prices so that the businesses would no longer be profitable. I remember even the documentary I watched, it was just like 4 weeks ago, 5 weeks ago, 2 months ago. One of the guys made a comment. He says, yeah, the companies that were the best organized and could reduce their cost of production, they're the ones who survived. But the ones that weren't able to do that did not survive. So to me, that's kind of the background of the oil industry of the United States and of the world. And the reason why this matters is because, very specifically, I found out a few days ago, the GDP of Texas, 9% of the gross domestic product of the state of Texas is dependent upon the oil industry. And then you have it happening you have that in Oklahoma. I don't know what the percentage is, but Oklahoma, I said both the Dakotas. We know about the, I guess Louisiana, they had the spill. So there's a large portion of the U.S. economy which is dependent upon oil production. And when those guys, we get two problems. Number one is all these guys are losing their jobs. And number two, all these hedge funds and investment banks aren't getting their money back. Unless the government does crazy stuff, which they will, but we'll see what happens. So that's kind of
big picture though. Are you kind of saying this is going to just accelerate the current crisis with the unemployment continuing to go up and
Exactly. Oh yeah. Yeah. If it were only oil right now, maybe it could be contained for a little bit longer.
Well,
But
I guess another way to look at this, Phil, is like what happened back in 2008 with that whole housing crash. I mean, that was just like basically just like residential housing. Whereas
yeah.
now we're talking about a pandemic plus an oil crash. It seems like it's more serious than what happened in the crash of 2008.
This is I would say 3 times. This is 3 times what happened before. I would say roughly, as far as like as an immediate shock. But I want to stress that it was going to happen regardless. There's no doubt in my mind, in a lot of people's minds, that this was going to happen regardless. The pandemic was just the event that set it into motion. But yeah, the struggle with oil prices, mortgage crisis, and then all the other debt I mentioned 2 videos before, credit card, student loan. Oh yeah, it's all coming together. Yeah. And I actually went to McDonald's the other day, and they were running out of stuff. Like there were some items they weren't selling. So yeah. Yeah. I mean, I don't know what else to say. This is what I've been preparing for 9 years, so I'm not surprised. Like,
Yeah. Yeah. So what advice would you give to people that are saying it's time to buy the dip on oil companies?
this is what I thought about with this. And it only works for people who have a lot of cash. The only thing, in my opinion, in the moment that's valuable in an oil company are the personnel, the resource, like the employees, and the infrastructure. Those are the only two groups of valid assets that any petroleum company, even in the world at this moment, will be able to have, because that organization or that business, if they can just kind of, go to sleep in a way and then kind of bring everything back online, that would be that if you want to buy a dip, you got to look for the specific, like I mentioned,
companies that can weather the storm, right? They have the balance sheet to go
exactly to weather the storm. Because I mean, the one thing, and the reason why they're not doing this, the reason why people aren't just not producing oil right now, and I forget this, it takes, I mean, they said years. It takes years to get these wells back up to full production capacity. That's what I mean. I forget where I heard that, or I have to find it again. It takes years. I mean, so it still takes a long time to shut it down, and then who knows where your employees go. But absolutely, and I would actually say that this goes for not only because this is what I do when I look at my life right now, not just for oil, for energy companies, but any kind of business or even individuals that have more assets than liabilities, or at least not too bad liabilities. Because I mean, I'll tell you, man. Most of I think the majority of persons in the United States and companies have more liabilities than they have assets. I mean, that's just the reality. And now's the time to start feeling and finding which are the entities and individuals which have assets, and which are the entities and individuals which have liabilities, and to invest in that which have value and not so much those which have liability, especially with oil. But that really is only going to apply to those who have like a vast amount of cash. Yeah, to be able to purchase. Yeah.
Well, and I think I would give that kind of advice to people that are, if they're planning on buying stocks right now. I mean, I think you have to go with companies that have solid balance sheets. I mean,
Yeah.
I made a couple mistakes. I think I told you about, like, there were a couple
Yeah.
mall REITs I had, and one of them was like highly leveraged, and like, so I sold that piece of crap before it.
Yeah, exactly. You want to look for the things that will probably survive. You might take a huge loss on it in the interim, but down the road, there's a chance that they at least can come back and do something.
You know what I'm curious about, though, I haven't recently looked up ExxonMobil's, like, financials in terms of like their debt to equity and stuff like that. But from what I recall, they're not really in a great position as far as like having a lot of cash on the books compared to debt.
I'm sure they're not.
So what I'm starting to think about now is what are going to be like the big oil companies to go. Like when you talk about the Royal Dutch Shells, the Exxon Mobil.
I haven't even researched at all today about them because I was doing other piddly stuff, trying to kind of get an idea of how the oil markets work. But then I found this article and I realized, you know what? At the end of the day, and this is the honest truth, in my opinion, everything that happened yesterday and then the decline in oil prices we're seeing, completely irrelevant unless you really are like an investor master and you know how to play the system. Because the real issue is that these companies are all going bankrupt, and we knew it 5 years ago. That's the main issue. That's the main takeaway. Anyone with half a brain knew 5 years ago that all the energy companies in the United States were going to go bankrupt. If yesterday it happened or not, it doesn't matter.
Now, do you literally mean when you say all, like 100% of them?
I will tell you what I read today. I read an article. I wish I had saved it. Maybe I did. This guy said, one guy says he thinks it will be 30%. And this other guy, they quoted, he said he thinks it's going to be 70%. This guy in the article, I should have saved it then since you brought this up. This guy, if I can find it, I'll share with you. He thinks 70% of the American energy companies are going to go bankrupt. 70%. I think it's going to be 80. I forget who I told that to. I told it to somebody. Whom I told it to. I think it's going to be 80. I think 80%. Yep, I do. Yep.
Well, I have to say I'm glad I don't own any oil companies.
Yeah. I don't know why. I mean, I don't know why anybody would have invested in this, because if you look at the graphs, do you know what happened to the price of oil after the last recession?
I can't recall offhand, no.
It dropped. And you know why the price of oil dropped after the recession? Or during the recession, rather? Because demand went down. Because everyone was unemployed. So no one was driving anywhere. People were cutting their spending.
Yeah,
so
now you have an oversupply and a low demand.
Exactly. Because I mean, in my prediction, because I didn't see the virus coming, but my prediction would have been another sort of debt crisis, probably stemming from property, but possibly credit card or student loans, and that would have been kind of the death knell for the oil market. But because of the shutdown, the death knell in the oil market has been rung before the death knell in the property market and the other highly leveraged industries. Yeah.
All right. Well, I think that just about covers our oil crash video here. But we are going to have more videos coming out for sure. There's a lot to discuss. Plenty. Not just all financial and crash related. Discuss too.
Yeah, we can talk about. Oh boy.
Eventually.
Oh boy, I hope so. We should do this more than once a week. This is a lot better than last week's video too. So
Yeah. Well, I mean, I think it would also do better if you were, outside lighting up your cigarette. That's always a nice touch.
yeah, it's too cold right now.
All right. Well, Phil, thanks for being on. Everyone, make sure to like and subscribe and leave a comment. I know Phil's been active in the comments, so if you feel like antagonizing Phil, you'll get your
Yeah, bring it on. Molon lave. Come and take.